Welcome back to my YouTube channel. I'm Rebecca Sowden, a self-proclaimed recovering super spender, and my niche is personal finance for super spenders. And I am going to be talking about the long-awaited, much requested topic of investing. And I've actually tried to film this video over the past 2 weekends. I've already tried and failed to film it this morning several times. So we're just gonna stick with whatever this turns out to be at this point in time. Before I get into anything, just know that I am not certified in any way, shape, or form to be speaking on any of the topics that I have the audacity to speak on. I'm just really sharing my experience and what I have learned over my 28 years of being alive. And honestly, I've learned most of this in the past 2 years. And then the 5 years prior to that, where I was in the workforce, but like not a full-fledged adult yet, I I didn't know what the hell was going on. When it comes to investing, my style is in it for the long game. I do not see this as a get-rich-quick scheme. I see it as a way to potentially retire early, but not really retire early. Like, I don't quite get the mechanics of that. I know that you have to heavily prioritize investing in brokerage accounts to make that truly, truly happen. That's not what I'm talking about today. I'm talking about the classic fill retirement, then move on to brokerage kind of style of investing. And to be fair, if you talk to multiple financial advisors, if you talk to the experts in this right now, they don't really all agree. They don't have one opinion that they all share as definitively the best thing to do. So just take what you've got and move forward with that knowledge and do what feels true to you. That being said, here is my order of operations for contributing to accounts. Number one, 401k. This is probably the most common investment account that you can have because typically it's through your employer. And starting in 2025, employers are actually required to open 401k accounts for their employees. So if you're thinking, I don't know if I even have a 401k account, ask the people you work with. Ask your manager, ask HR, do we have a 401k? Where is that 401k at? Did I sign any papers? What have I done? Figure out your situation, the lay of the land. So number one priority is contributing to the 401k enough to get the company match program. So a company match program is just when your company says, hey, if you contribute 6%, I'll contribute 6%. And you go, that's incredible because that's actually free money. And then sometimes they'll say, we'll contribute 50% of whatever you put in up to 3%. So if you contribute 6%, they'll contribute 3%. And then if you contribute 7%, they will still contribute 3% because that's the max that they set for themselves. The next thing on our priority list is the Roth IRA. The Roth IRA, we want to max that before we move on to anything else. The Roth IRA is probably one of the most beloved type of investment accounts. And then number three is we want to go back to the 401k, especially if that's a Roth 401k, and we want to max that out if we can. The max for that for 2025 is $23,500, which is a lot of money. So if I said that and you think, Rebecca, I do not have 23.5 grand to put in a 401k account, that's fine. That is okay, okay? I couldn't put that much money into the account up until maybe last year, and last year I really stretched myself super thin. So don't feel bad if you're like, can people do that? Yeah, people can, but not all of us. That's something we're working towards. And then we've got number four, which is opening a brokerage account and contributing money to there and buying stocks from there. Now we want to lay a little bit of groundwork, just get some terms out of the way. So when we're talking about retirement accounts specifically, you'll probably hear the terms traditional and Roth a lot. The money in that traditional retirement account, we put money into there before paying taxes on that money. So that's a tax advantage for now, but that just means when it's time to retire, we have to pay taxes on that money later, which might be a bummer depending on what the tax brackets and percentages are by the time we retire. So it's a little bit like I need that money now, and then my future self can deal with the tax situation later. And then the Roth account is tax advantaged, but in a different way. So the money that we're putting into the Roth account is already been taxed. It's already been taxed. Now it's just my money, and I can put it into that Roth account. And then when it's time to retire, I don't have to pay taxes on that money because I already did it. So the tax brackets and the tax percentages of that time do not impact me. I'm unconcerned with whatever's going on there. So the way it was explained to me is if you plan on retiring with a lot of money and having a higher income at the point of retirement, go with Roth. Prioritize the Roth accounts that you have access to. And then if you think about retirement and you go, yeah, I'm not gonna have a lot of money when I retire and I will be taking out probably low income bracket money at that point. That being said, let's start with talking about number one, which is your 401k account. So when you open your 401k account, or when your employer opens your 401k account for you, you select the type of portfolio you want to have, like stocks, bonds, just like a various combo of those things. I mean, some companies give you more choice than other companies. It really depends. It depends on where you're at. And then some companies, if you don't understand what you're picking at the point of picking it and you just like opt out, you don't pick anything, the company will choose it for you. So if you want to change that, if you're like, what the heck am I investing in? Find out where your 401k is, look at it, look at the ratio, because they usually have charts on your on your retirement accounts. You go, let me open it up, and then they'll say these are the ratio of stock to bonds that you currently have you're rocking with. And then if you want to change it, or if you want to even know if you can change it, you gotta talk to people. You really do. And some people are like, actually, I don't care that much, and that's totally fine. That's the boat I fall into. And then some people are like, no, I care deeply. Great, I love that for you. Go forth, let me know what you find. Let me know how that plays out, because I will not be investigating that at this point in time. Now, if you want to change your contribution, so let's assume we know where our 401k is held, and now we're going, actually, I don't know how much money I'm contributing to this every single paycheck, and maybe I want to increase it, maybe I want to decrease it. Also, what even is the company match program? Like, how do I find that out? Well, I'll tell you, or I'll at least tell you how it is for me. I have my 401k at Fidelity. If I want to see what my contributions are, I just look at my 401k account, and then I'm trying to find the contributions section, and it'll usually tell you like the contributions that you've done so far for the current year, and also the contributions that your employer has done for the entire year. So I'm going to do change contributions, which is in the contribution section. And then they'll give you a list that's like, do you want to change your contribution amount, annual increase program? So you can set it to automatically increase every single year if you want to. I haven't done that, but some people do. And then roll money into your retirement savings. I haven't looked at that one, so I don't know what that one is. The explanation is, what is rollover? Yeah, they usually have breakdowns. I'm not gonna get into it. So I'm just gonna click contribution amount. What do I want to change? And then my dogs are barking because my mom has just gotten back from bringing one of our other dogs to go on a hike. We have small dogs, and then we have a German Shepherd. They have different interests. We got easy contributions. It says get it done in less than a minute by selecting a package. You can always make changes later. No, I'm going to change contributions the old-fashioned way. So use this longer process to change your own contribution amounts. Yes, that's what I want. Thank you. Okay, so now we're at this page, and at the top of it, I don't know if this is true for everybody, but it's true for me, and this is all the context I have, is it'll tell me what my employer matches. So it says like your employer matches up to 6% of your eligible compensation that you elect as pre-tax or Roth contributions. When you contribute to your plan, your employer matches 75% of the first 6% of your pay. Great. So the max I want to put in for step one of this process is the 6%, and I'm going to put it into my Roth because it actually doesn't matter which one I choose. So I'm just going to put the full 6% into my Roth account. Now you can see that there are different categories. We've got pre-tax, pre-tax bonus, Roth bonus, after-tax bonus. I don't know what all those mean. I tried to look it up once and I was like, what? So I just think about pre-tax and Roth. So pre-tax is AKA traditional. And then you just say change contribution amount, which I don't need to do because I didn't actually change anything, and then you're good to go. That's all that's necessary for this little excursion. Now we're going to move on to step 2, which is the Roth IRA. So if you are like, I don't even have a Roth IRA yet, where should I open that? Where's a good place? I personally use Fidelity because when I was like 19 and listening to a bunch of financial podcasts, every single person was promoted by Fidelity. Every podcast I listened to that was related to money was like, open accounts with Fidelity. So guess what I did? I was like, yeah, I'll open accounts with Fidelity. And Fidelity has been great to me. Okay, they have a great interface. It's very friendly. Okay, I've never looked at my Fidelity interface and gone, what is this? Where do I go? Like, it's pretty straightforward. It's quite intuitive. So I like it. Now, the other place that I'm hearing right now, which is like, I'm seeing so many ads for it. If I was a 19-year-old at this point in time and I was listening to podcasts, the place that I would open the account based off of everything that everyone was saying would be Vanguard. I'm hearing Vanguard everywhere. My husband uses Vanguard. Some of my friends use Vanguard. So I feel pretty okay with saying Fidelity or Vanguard are pretty safe scenarios. For the purposes of this video, I am going to walk through how to open the 401k at let's do Fidelity and Vanguard. All right, let's try them both. Here we are at the Fidelity website. Open an account. Ooh, we've got retirement RRAs, investing and trading, spending and savings. So I'm gonna do a Roth IRA. And that's how simple it is. That's just how you do it with Fidelity. Easy peasy lemon squeezy. Now let's slide on over to Vanguard. I feel like it's probably going to be a similar situation. Mutual funds, sure, whatever that is. Okay, and then we've got personal investors, retirement plan participants, investors, blah, 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 blah. Let's do retirement plan participants. That sounds like what we're looking for. Access your account, log in, register for online, enroll in your retirement plan. Maybe that's it. Oh. Set up a username and password. Okay, so actually I'm not going to walk through Vanguard because I don't want to click on something that's going to make me create an account before I choose the account that I want. So that's what Vanguard looks like. We did nothing with it, but there it is. Pivoting back to Fidelity because now we're going to walk through how to invest the money that you've put into your Roth IRA because it is not automatic right away. You got to make some choices. You have to make some decisions because if you are contributing money to your Roth IRA, but then you're not investing it, then that money is not doing anything. It's sitting there earning no interest, doing no job whatsoever. And not a lot of people realize that. So if this is the first time you're hearing that, then like do not feel stunned or like super far behind because it is not common knowledge, although I feel like a lot of us are starting to say that more and more when it comes to speaking about Roth IRAs. So I'm hoping that it will be common knowledge really soon because now you know. If you didn't know before, now you can tell other people. So when it comes to actually buying stocks or even selling stocks, what we want is we want to trade. So I'm looking for the trade button, which is right here. So we're going to do trade. What do I want to trade in? We've got stocks, ETFs, options, mutual funds, crypto, fixed income, blah, 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 blah. I'm sticking with stocks and ETFs. And then we've got the account. So what account do I want to use? If you have multiple accounts, if you've got brokerage, 401k, all the same place, all of those will be visible here. And by all of them, I mean just the IRA and the brokerage account because the 401k is doing its own thing. So moving on, we have to choose what we want to buy. So here we have SPY, VXUS, and VOO, which are things that I have chosen in the past, which is why they're suggesting them to me now. I'm going to go with VOO, and I want to buy. And I'm going to do dollars because I almost never have enough money to buy a full share in this account. So I'm just going to do dollars so I can buy part of that share. And then you enter your dollar amount. And then you say, okay, do I want to buy at the market price? So just like whatever it is right now or whenever the market opens, like it's just the price is what the price is and I'm not bothered about what it is. Now, if I do limit, then my understanding of it is like sets the limit of the price you're willing to buy. So I just put like, okay, well, if it goes up to $555, then it's too expensive and I don't want to buy it anymore. So that's the limit price that I would put there. And then once you fill out this information, which, you know, hypothetically we've walked through at this point, I'll just put preview order and then you submit the order and then you're fine. And that's the end of that. So it's pretty straightforward. All right, and then number 3 is, once again, going back to the 401k and investing in that as much as you can. You know, ideally doing the $23,500 max for the year. But if you can't do that, whatever. Now we're going to talk about number 4, which is opening a brokerage account. And again, we're going to use Fidelity as the example because it was easier for me. So back to the homepage of Fidelity, you can log in and you can add an account to your thing if you've already done it that way. But essentially, we want to find whatever it is that says open an account, and then we just do brokerage account. We open it now. Look how easy that is. Open now. I don't know what comes after that button, and I don't want it to automatically attach to my account. So I'm not going to click it because I don't intend on opening another brokerage account with them because I actually already have one with them. Now, it kind of works the same way as the Roth IRA. So you put money into the account and then you use the money in that account to trade, to sell stocks, to buy stocks, everything like that. Just know that if you're using a brokerage account and you buy stocks and then you want to sell those stocks because they got way bigger and you're like, wow, I made so much money on the stock that I bought. If you are trading that, if you're going to sell that in less than a year after having bought it, you're going to have to pay capital gains taxes and it's going to be way higher than if you let it sit for a year. So I would say open the brokerage account and buy stocks with the intent of either having those stocks appreciate so much that we don't even care about the capital gains tax anymore, or letting them sit for at least a year before you decide to sell. I'm way newer to the brokerage scheme. I don't know all the what's and what's nots of the game, but that is one thing that I heard that I was like, okay, I need to commit that specific thing to memory, is like buy it and let it sit for at least a year. And there's no limit on how much to put into the brokerage account, but that's because it's like not tax advantaged. There's nothing special going on with it, like the Roth IRAs and the 401ks. It's an investment account. So I guess the draw of it is if you invest in certain stocks or mutual funds, you want to look at the dividends. Like when you open the stock, when you select it, when you review the stock, they'll be like, do you get dividends? Which means you get paid money for owning that stock and like you don't do anything. But I'm giving you the knowledge that I have, which granted is not a lot, but it's enough to get the ball rolling. So if I said something that's interesting to you, whip out your computer, take out your phone, exit this video, look up some stuff, okay? Look up some keywords, I suppose. I'm not gonna re-walk through how to trade stocks from the brokerage account because it is quite literally the same setup as what it was for the Roth IRA account walkthrough, except instead of clicking the Roth IRA account, we're gonna select the brokerage account. Last tip of this video, and then I'm going to go take a nap, is if you want your investments to be automatic for your Roth IRA, you can choose to have automatic investments and say like, I want X amount of dollars to go here every single month. Like if you're saying I'm contributing $585 period per month, then that means you can say, and I want 300 of that to go to this, and I want 200 to go to this, and I want 85 to go to this. And you can just make it automatic. You can make it take care of itself. So if you're like, I'm not gonna remember to log in every single month and allocate funds to different things, that's fine. Set up an automatic system. Thanks for watching. I hope this video was helpful. I did my best. If you've got some technicalities you want to share, if you're like, if XYZ is your situation, then ABC. I welcome that in the comments. I'm interested to learn about stuff. Like I said before, I don't know everything for everyone, and everyone's situation is different, and little nuances can greatly impact what you do in terms of order of operations for investing. So like most things in personal finance, this is personal. Personal to you based off of your priorities and your life and your income. So just do your best. At least do something. At least contribute a little something. If you're interested in consuming more content from me, I have a podcast with my best friend called Life in Quarters. I also have a TikTok account. You can find me at rebecca.sowden. And then I'm on Instagram, and I'm very, very active on Instagram, mostly on the stories. I like to do polls. I like to ask questions. I like to answer questions. And my username on Instagram is r.sowden.money. I have all relevant links in the notes of the description of this video, so you can refer down to there if you want to directly go to any of these platforms or see any of my personal money tool recommendations.